to another video. In this topic today, we're going to be talking about what is student loan refinancing and the three major mistakes that people oftentimes make. Now, some of the stuff, just to let you guys know, you're going to see some numbers, you're going to see some tools. You don't have to memorize this or anything. All you have to do to get help is become a member at FitBucks by building your profile. And then right up here, after you build your profile, there's a little schedule a call icon. Just click that, jump on a call, talk to one of our coaches. It's all free. We'll walk you through all of this, okay? But this video will give you a good understanding so that way when you do call us, you'll know a little bit more about what we were referring to on the phone, okay? First and foremost, refinancing is where you have a loan and you go to another lender, another company, and say, now that I have an income, will you give me a lower interest rate on a new loan? If they say yes, then they will turn around and write a check and pay off your old loan, and you have a brand new loan with the new company. So what refinancing is replacing your old loan with a new loan at a lower interest rate. Okay. Now, the purpose of it is to save money, but when it comes to student loans, it's not always that simple because you're going from a federal loan to a private loan oftentimes. And then if you decide, yes, that's what I want to do, then you got to decide which type of loan and which term to go into. So those are where the mistakes come in, and that's what we're going to be talking about today, okay? So the first mistake people make is they refinance when sometimes they're not really saving that much, okay? And so they go from giving up federal benefits to a private loan, and they're really not saving that much. But most of the time, it's not their fault. See, what happens is people go to these loan refinance companies or some of these finance sites that have calculators. And their calculators are very, very rudimentary. They're old. There's no flexibility in them. And that can tell you the wrong thing. So I'm going to show you that, the first mistake that people make. Now, in this profile, I'm going to come down here to Tools. I'm going to go to our Student Loan Refinance tool. Okay. I'm going to click here first, Refinance Current Student Loans. And you can see here that I have 8 different loans. It totals about $153,000. Now, I'm going to come up here and say select all because I'm going to refinance every single one of my loans. Side note, you don't have to refinance all your loans if you don't want to. Okay. I'm going to assume in this example that we are. So I'm going to click select all. I'm going to come down here and click continue. And this is where a lot of people, where they make mistakes. They're like, I'm going to aggressively pay off my loan. And the 5-year is giving me the best rate. So it's going to be 3%. And so that's what I'm doing. And they come in here and they use a cookie cutter tool at one of these sites and they click calculate. And this is what they're showing. Okay, you would save $46,000. That's a lot of money. Like if you were being told you're going to save $46,000, you'd probably be like, yeah, I'm refinancing. Okay. Now, here's what is actually happening. There's 2 components that are responsible for that savings. The first one is the lower interest rate, but in this case, I'm going from a 10-year loan to a 5-year loan, so my payment's a lot higher. So the way that we get rid of that is we say, okay, well, what is the difference between these payments? And let's pretend like we're actually making that higher payment and now calculate it. My savings went from $45,000. That's what those companies would have shown you. My real savings is $17,000. Now, some people might say $17,000 is a lot in savings and I want to refinance. I tend to agree with that. However, some people say no, that's not enough. Sometimes you do these calculations, it might come out to like $500 in savings from the student loan refinance. The bottom line is you have to do this calculation correctly because if you don't, you're going to be told that you save way too much. You have to know this answer so you can make that decision on your own. Is it enough for me to refinance or should I stay in my federal loans? Again, as I mentioned at the beginning, you don't have to worry about all those numbers that I just showed you in this tool. If you guys need help with that, so schedule a call. We'll help you do this and get to this real dollar amount that you're saving from refinancing. So that's mistake number 1 that people make, okay, is that when they go to refinance and they shorten the term for the lowest interest rate, the tools will say that they're oversaving. Now, mistake number 2 is actually the opposite way. People might say, I can't really afford the 5-year, the 10-year, whatever it is. And so they get a 20-year offer. Okay, now let's look at that mistake. Let's just say I'm going to get a 20-year offer and it's at 4.25%. So then I come in here and I continue. I see my numbers, I hit calculate, and you can see that if I did this on a normal website at one of the student loan refinance companies, it would say if I did this, I would lose $16,000. That's not what happened. You don't lose $16,000 because of refinancing. You lose the $16,000 because originally, if you recall, I was in a 10-year loan. And then in the refinance, I'm looking at a 20-year loan. So because I'm paying for 20 years on a loan, yeah, it's going to be more expensive. So that's the mistake people make, is oftentimes say refinancing doesn't help me because this calculator said I lose money. But in order to actually see this correctly, you have to say, okay, well, let's make this into an apples to apples comparison. And so to do that, you just make the student loan refinance the same payment as the 10-year that you're already on. You hit calculate, and now you can see that compared to what I'm in this example, I would end up saving $28,000 by refinancing. So those are the two primary mistakes people make. Either in the refinance, they shorten the term of the loan. And so when they run these refinance tools, it's saying that you're saving way too much, okay, when you go to these other websites to actually run this stuff. And so then they make potentially a really bad decision. Or they lengthen the loan out, and at these student loan refinance companies that have these calculators, it shows them that they're losing money by refinancing, so then they decide not to do it, when in reality, they could potentially save a ton of money. Again, these calculations, you guys need help, schedule a call. We'll walk you through this all for free. But the third one that I want to make sure that I touch on is, let's just say that in this situation, you're like, yeah, the refinancing potentially looks good. And people will say, well, I'm getting a 3.5% offer on the 10-year, and I'm getting a 3.6% offer on the 20-year. But I don't want to pay for 20 years because it's going to cost me a lot of money. And it's like, yeah, you're right. But don't necessarily pay over 20 years. Maybe you might want to go into the 20-year and then just make prepayments. So that's the next step that you have to do, is say, do I use a longer term loan versus a shorter term loan? And what would be the benefit of doing a longer term? And I'm going to answer that question for you in a minute. But right now I'm going to show you some numbers. So I'm going to come down here. I'm going to go back to the very beginning. And I'm going to click compare refinance offers. So I'm going to say in this example that my first offer is for $153,000 on a 10-year loan, and that's at 3.5%. And on the same loan for $153,000, a 20-year is at let's just say 3.75%. Okay, we hit continue. Okay, so you can see here that my 10-year payment would be $1,512 and my 20-year payment would be $907. But to make this an apples-to-apples comparison, I need to make the two payments the same. So that means on my 20-year, I would make a prepayment of $1,512 a month. I hit calculate, and now I can see the difference. Here, it would cost me $184,000 versus $181,000 on the 10-year refinance, which is about $2,500 more. So basically, the 20-year, if I paid it off in 10 years, the higher interest rate cost me $2,500 more. The reason why this is so important is because you might look at this and say, well, I can afford this $1,500, and I'm just going to do that because it saves me the most money because my interest rate is lower. But it can't always be that cut and dry, because we have to look at this as a financial plan. This gives me almost $600 in budget flexibility. Like if I have an emergency or something one day and I need to buy a new car or something, I don't have to make the higher $1,500 payment. I only have to make the $900 payment. So it gives my budget a lot of flexibility. Not only that, but let's just say maybe one of your goals is trying to buy a house. Okay, when you go to buy a house, they look at all your debt. Bottom line is, the higher this required payment is, the harder it is to get a loan on a mortgage. So if your student loan payment's higher, it's going to be harder to qualify for a mortgage. So both from a financial planning risk component and financial planning in terms of potentially saving for a goal or doing some other type of thing like buying a house, extending your loans and then saying, hey, I'm still going to make prepayments might be better off. But you need to know this number. So you might come in here and say, hey, in this example, by extending my loans out to 20 years and then making the payments still to pay it off in 10, it only cost me $2,500 over 10 years. That's $250 a year. That's not that much money. I'd rather have the extended loan so I have some flexibility in my budget, and I'll just make prepayments and still pay it off early. Or you do this, and the rates are really different, and you're like, holy cow, the 10-year does save me a ton of money. Then you want to go with a 10-year. But you have to do this analysis because I see people all the time, they go into like this 10-year for no reason. They could have used like a 12-year, a 15-year, or a 20-year, and it would give their budget a lot more flexibility. But then they come to us, either A, they have a problem because they ran into an issue, or B, they're like, I went to go qualify for a house and I don't qualify anymore. And it's like, well, because you didn't plan. Okay? So that is the third mistake, is people just say that's the highest payment that I can afford and that's the lowest rate. Boom, that's it. So again, to recap, the three biggest mistakes that people make, they use the student loan calculators at some of these other sites. And the first mistake is sometimes it overcalculates what you're going to save. At other times, it undercalculates. And in either one of those situations, if you don't have the right number, you might make a poor decision. Okay? The third mistake is that people oftentimes will just choose, like, for example, in my example, the 10-year loan, when in reality, they probably should have done the 20-year and just planned to make prepayments because it gives their budget more flexibility and might help them out in their financial plan a hell of a lot more than going into the standard 10-year plan. Again, if you guys have questions, all you got to do is become a member of FitBucks, build your profile, hit the schedule a call icon. It's all free. We'll walk you through this. Make sure you're doing the right thing. Make sure it fits your financial plan. We look forward to talking to you. See you soon.